Ladies and gentlemen, welcome to the Midday Market Monitor. In today's live stream, we're back. I said that I was going to take the week off. I was going to focus on more videos, and it lasted a single day, and I felt like I had lost something beautiful in my life, and I wanted to be back immediately. I'm still going to focus on more videos. They've actually been doing phenomenally. So yeah, going to keep doing that. But I love you guys so much. And I was like, man, I feel like I'm just not going to be able to talk to people. So maybe I won't do always to 2:30 or something like this. Like maybe if I have an hour to cover stuff that I want to cover, I'll do it for an hour. If it's 30 minutes, I'll do it for 30 minutes. But I still want to have that time to talk about things that I had so many opinions on. Even just over the weekend and Monday, I just felt like I had lost, I'd lost my phone book. I'm like, who can I call now? Okay. That being said, we have a lot of news to cover, and I will have to get into the news. So, first up, let's quickly cover some topics from Monday. We had seen a large swath of upgrades across Nvidia. So KeyBank ended up putting a $275 price target on Nvidia. Right now, Nvidia's current expectations is that they're going to do $65 billion this quarter. Coming Wednesday is their earnings. We'll be live with Amit and Jose and Neil and all those guys. We do our quarterly Nvidia report or for earnings. However, KeyBank came out and said, we actually suspect because of the rising demand in B300s and the GB300s, the H200s going out to China, that they are raising their forecast not to 65, not 66 billion, but $69 billion, and actually raised fiscal Q1 earnings results for next quarter, okay, to $75 billion. That's $10 billion more than they did last quarter, okay? They said that the Blackwell results are actually being priced much higher than the old, even the B200s or the Hoppers as well. And so as the upgrade cycle comes through, it's not even that they're just getting more sales on a per like GPU basis, they're making more money. This is not only going to lead to much, much higher revenue, but because of the increased cost in memory, which is getting passed on to the client, hopefully we can maintain similar margins. That being said, Cantor Fitzgerald then came out with a $300 to even $400 price target. CJ Muse is one of the highest. He's a top 10 analyst on Wall Street. Said that they are going to come in with a strong beat and raise, and we could see a price target on this stock of essentially $400 per share, which would put it right in the ballpark of a $10 trillion market cap 1 year from now. That's their expectation. They're calling for, instead of for calendar year 26 and calendar year 27 to coming in at roughly $7.75 to $9.50, respectively. So for each year, that would be, what they're actually saying is probably going to be $9 in 2026 and $12+ in 2027. So way, way higher than what Wall Street is currently expecting. And that they see that CapEx is rising, and that Nvidia is going to continuously sell, and that they're actually not seeing any slowdown in backlogs that's building all the way through calendar year 2028. Gosh, it's a good day. It's a good day to be an Nvidia shareholder, even though, the stock can be reflective of anyone's opinion right now, and stocks are taking massive sell-offs based on, not a lot of news. Look to SoFi, honestly. This company is, I say so much whenever some of you might not know. I see comments all the time in chat of people talking about how this is due to dilution. This is due to Anthony Noto, and he needs to be fired. It's like, guys, go look at the broad names in fintech. Go look at the broad names in all of software, right? We're seeing sell-offs across everything. Are we supposed to replace all these CEOs, or are we just having a broad-based sell-off right now? Is ServiceNow doing something wrong? Tell me all these CEOs are doing something wrong. Gosh. It's a big sell-off. SoFi's cheap. I ended up buying it. That's what we do. Because although I was still acquiring at the 25s, 26s, I think those were deals as well. And I think that will come to fruition as the years actually move on and we do see 30+% revenue growth, which is what they're guiding for, with higher and higher margins. It's so hard to find companies that can explode on margin and revenue. Okay. I'll have sort of a video coming out on SoFi either today or tomorrow. But just the constant execution, compounders, right? That's why Costco has such an amazing like valuation. But we have to realize like when was Costco founded? SoFi is a new company. The execution is not as strong, or the execution credit is not as strong. 1983 for Costco. They've been executing and constantly compounding for years and years and years and years. It's not quite the same for SoFi. People don't know if they're going to continuously execute. But I believe, based on the numbers that we've ended up seeing and the forecasts from a CEO and from a company that I know more than 99% of investors, is that this company beats on earnings. They constantly innovate. The products get better over time. They stay ahead of their competitors. And they win. They beat expectations, and currently expectations is 30% for 2026. I think it'll probably be closer to 35%. Those are great numbers. I buy the dip. Okay. David Chiavrini said, "Why would anyone waste their money on SoFi?" So this is not actually the analyst David Chiavrini, but what is funny is David Chiavrini was very much like this, where he actually ended up putting a call to say, hey, you should short SoFi and you should go long Lending Club. And both of those, guesses were wrong. Lending Club actually way underperformed SoFi. SoFi ended up destroying Lending Club, and David Chiavrini was wrong on both directions. So these are the naysayers. But the guy in chat's just having fun. AMD is better than SoFi. Yeah, there's definitely a possibility that AMD grows way faster than a bank right now, But I think that that's more of a cyclical play. You're playing a name right now because it has a very big build out opportunity. But honestly, I'm not positioning my portfolio to say, hey, you know what, SoFi is better than AMD. I have 50% of my portfolio, 48% of my portfolio in Nvidia. My build out infrastructure plays and AI in general, whenever you include names like Nebius and Google and Meta and all of these things, like AI adjacent names make up for more than 60% of my entire portfolio. I'm just not putting all my eggs in that one specific basket. I also think that there's other themes that are very important, like financial services, cryptocurrency, stuff like this, that I also think will boom. I think that there's a lot of areas that are going to do very well. By the way, SoFi did not miss S&P 500 inclusion. Some people took that as being what I tweeted. I just said that they fell below that milestone. It was like something that I thought was an interesting tweet, but that doesn't mean that they can't enter the S&P 500 even this quarter. Okay. It all depends on at the time of whenever the committee meets in order to look at what company is going to be entered, whether or not that they're above that $22.7 billion threshold. Okay. For SoFi, did we hit bottom or not? I don't think there's a way to know 100%. I think that I need to monitor how much cheaper that this company is getting. And I'll have a video, like I said, come out about the actual valuation of what has happened over the last little bit. But whenever a company takes a sort of 43% drawdown, it gets cheaper. And if you were a buyer back then, you should be a way bigger buyer now. The problem that is hard for retail is that they feel like they're missing a piece to the puzzle, and that's where all the red flags are. Is where they didn't end up knowing where to look. I haven't found that piece yet. I don't think there's a piece to the SoFi story that I'm missing. And I mean, I do see potential red flags. If every white collar job ends up getting lost, those are the loans that SoFi has. They've got a lot of people in those areas, except, however, they deal with a lot of stuff like lawyers and dentists and all of this stuff. And I don't think that the dentists are being replaced right now. So I think we'll be okay. Tanner, did you do some more DD on Wix? I absolutely did. I love everything I'm seeing about this company. And in fact, I've become a customer. Base 44 is one of the parts of Wix. I am becoming a degenerate vibe coder on Base 44, and it's truthfully what I believe the easiest platform to do so. You need absolutely no coding knowledge, 2 to 3 prompts to get to an amazing tool that potentially you didn't have. So what I think is for me, because I'm not so technical, I'm not trying to reinvent the wheel. I'm not trying to go after a Bloomberg terminal or some of these massive companies with 10,000 plus, employees and trying to go after what they have. What I'm trying to do is there's some tools that I've needed that would just make my job a little bit easier, but there's no real solution that is that specific to my needs that I could pay for. So Base 44 is helping me create, here's a tool, for example, a job scraper. Just going on a thing like SoFi.com/careers and getting a Python script to just scrape all the jobs. Put it all into a neat thing. Vadim already does it on X, but I have to wait for Vadim to end up putting those out on X, and I just want to be able to do that myself. It was a prompt away for me to be able to do it, and now it doesn't have to just be for SoFi. I can do this for, Robinhood. I can do this for any company that posts a careers page where they show all their stuff. So just these sort of small tools that are just like, hey, this would better my DD. Okay, well, I'll make that. And that's what it's about. Okay. Shall I buy more SoFi? I think that's it's more of a you question than a me question. I don't know. I do not know. What I do know is all of the deals and build-outs and artificial intelligence is still happening, and I'm getting so freaking excited about essentially all of big tech. I'm loving Google, loving Amazon here, loving Meta, and I can't wait. I can't wait. Parsival, the Amex and Visa sell-offs had to do with the Citrini piece that they ended up putting out. They ended up saying that AI agents are essentially going to be using stable coins to bypass, one, work a lot faster, but also bypass interchange fees. So Visa and MasterCard and Amex and all of these companies ended up taking hits as they said that more, businesses will end up using stablecoin rails and AI agents, and the currency of the internet is crypto. Right? Essentially, this piece here, I could show you this here. AI agents will eventually transact on stablecoin payment rails and bypass interchange. But I'm a believer in this. I think the problem is that we're going to have a lot of Jevons paradox type events that are going to end up happening. So the company that we ended up talking about on the members only live stream before this was Uber. And I'm actually beginning to believe like I probably need to take a stake in Uber because I think as more and more autonomous vehicles end up coming onto the roads, that it's not just going to bring prices down, but it's actually going to greatly increase the amount of times that people actually use those services. If you guys know me, if you guys have been a long time watcher of me, I don't drive all that much. It's not that I like, someone else drives for me. It's just like I've got a car, I pay for insurance, like all this stuff, but it's probably actually more cost effective for me to use Uber right now, just because I don't go that much. Like my insurance is actually based on like they essentially treat me like I'm a 90-year-old woman who only uses her car to go get groceries. Like, I mean, I don't drive. Like I'm putting let's convert this to miles, like probably like 2,000, 3,000 miles a year on my car, if that. If that. I don't drive. So what's it called? With Uber autonomous vehicles, would I even go to get a new vehicle and buy a new car? Like right now, I'm not going to take an Uber everywhere because I don't want to I like paying for the luxury of saying, oh, you know what? Actually, I'm going to change my mind and take a left here and stop at this restaurant, go use the bathroom. I'll turn around. I'll go a little faster. Maybe I'll take this, like whatever. I like the privacy of farting in my own car. How about that? Right? I get to pay for those luxuries. But in an autonomous vehicle presence, where the cost ends up getting cut by 2/3, there's no one else in the car. I can listen to my podcasts and all this stuff. I can be in the backseat. I don't have any of the liabilities of the insurance or whatever. I can work. I can go on my laptop and edit a video while being driven to my location. Not only is it cheaper, I'm saving money, but I'm actually making money. You know what I mean? Like, I'll probably, whenever this comes out in major cities, and it can be, in all the areas where I believe Uber is today, of course I'm going to sell my car. I've got no reason to drive. So there could be a lot more demand for things like Uber while autonomous vehicles end up coming out. And I think that that's sort of the stablecoin thing. Going back, that was a really, really long way to just say that I actually think that Visa and MasterCard and all of these things will be fine. It's just we're going to have a lot more transactions. I think too many people are saying, okay, well, if these transactions are happening over here, they're not going to happen over here. Whenever I think people need to realize that there's just going to be more transactions, right? That Jevons paradox thing. It's not that AI is going to make it so then all Google searches end up going to much higher costs. It's just we're going to have many, many more Google searches. We're going to ask more questions. We're going to get more curious. We're going to shop on Google and we're going to shop on Meta and all of these places. And yeah, it's going to be great. Driving a car will be like riding a horse. I think without a doubt that's going to be the case. People will drive car for luck or for pleasure. They're going to get really, really nice cars, and the Toyota Camrys and the Honda Civics and all of these are going to be fully autonomous. Okay. Let's see. Nvidia CEO bragged on Meta being better at AI than anyone. Announced today between I don't think so. Meta is like OpenAI. Okay. They are making a massive deal with everyone. The only reason why Meta is not selling off the way and like people are not looking at it like OpenAI is because people just look at their balance sheet and say, oh, okay, wait, they can afford it. What about Waymo? I know you can order a Waymo through Uber, but do you think Waymo or Robotaxi will take most of the share of autonomous vehicles? No, I honestly think there's going to be so many players. There's a lot of OEMs that make vehicles, right? And I think that they will be able to convert. Maybe there will be some software names like Nvidia and Waymo and Rivian and all of these companies that will end up helping with full self-driving. But there will be a lot of players. A lot. And do I think that essentially what I said on the live stream before is that honestly what I believe is that there's going to be a lot of these companies that have almost like e-commerce today. They have their own websites, but then there's also centralized exchanges or centralized marketplaces. So think of like a Shopify and in an Amazon. You can go buy their thing on, direct to consumer. Margins are better, but it's very hard to find customers that way. So you go to Amazon to find the customers and offer your product, and Amazon gets to take a rate for doing that. I think Uber is going to be very much that way, where Waymo might be able to have their own Waymo app, but getting people to the Waymo app is going to be the hard part. Okay. I think that Uber is going to be where 200 million people already exist. I want to go on and not say, hey, you know what? The closest Waymo is 9 minutes away from me. Screw that. I'd rather pay 60 cents more for my ride and click Uber. And I don't care if a Waymo or a Honda or a Tesla or any of these things end up arriving, because it's going to take me from point A to point B. It's going to be a complete commodity as long as the seats are leather and I've got a place to plug in my laptop. I mean, come on. You order an Uber today, and okay, maybe you choose between Uber X or Uber Black or something like this, but you're not getting to select the model of vehicle. No one cares that much. Drive me forward. Make sure it's safe. It'll be fine. Okay. Microsoft should let OpenAI go bankrupt. Well, it's not really up to them, Let them go bankrupt. What does that mean? Leather seats in winter are crap. All right. To each his own. Seat warmer, Okay. That being said, let's go ahead and jump in. We didn't really because I wasn't live yesterday, but PayPal ended up having some buyout possibilities, let's say. Let me share my screen. There were commentary yesterday of whether or not PayPal had a buyer. Is this Amazon? Is this another name? Is this another payments name? Is this Google? Who knows? This rumor alone ended up allowing it to bounce up 6%. And I saw a lot of people get very excited. Go back over 3 months, 1 year. Unless you bought down here, I wouldn't be too excited to start celebrating just yet. The company has been in a big sell-off. We'll see what happens. Maybe it's a private equity deal. Who knows? Did you watch the Anthropic event? I did not watch the actual event, but I did see the highlights. Claude Cowork is now bringing, more software designed to automate work in fields including human resources, investment banking, and design. Could be interesting. I do worry about a lot of these names that every single time that we end up seeing an update from Claude, we're going to have a new sector or industry end up getting sold off. I actually don't see how that's going to change for the next 5 years. The models are only going to keep improving over time, and that's just going to keep kicking down those companies. One of the ways to play this is, hey, buy the chip names, buy the cloud names. I like Nebius. I like Google. I like Amazon. There's going to be a heckload more need from Claude, and if we're replacing human, human ability with silicon ability, we have a long way. That the total addressable market of chips and cloud to replace human labor is off by a long shot. Not human labor, but the tasks that end up needing to get done. And then it goes back to that whole Jevons paradox and everything like this. Okay, well, once we end up killing all these industries in lowering the price by 80 to 90%, what does that actually allow them to do in terms of new industries and like just the total amount of volume that ends up getting done at lower costs through stable coins and instant payments, and then autonomous vehicles and helping with we are at the craziest point in history where every industry is popping off. There's going to be so many increases in how do you say it, like profitability and margins and growth, and everything's 24/7 now. There's no longer a work day. Oh, it's crazy. I get so excited. Buy Nvidia, buy Nebius, sit back and count your money. That's what we need. And maybe whenever you get that excited, you realize you're in a bubble because like maybe the world's not going to change that much. So then you diversify into some other, financial names and stuff like this, like SoFi as a backbone of your portfolio, because you realize that no amount of AI is going to replace capital. And then you go back to a balanced portfolio of not just AI names, because you realize that once you're a little too excited, you got to start watching out. Meanwhile, Altria Group is at roughly $70. Dude, tobacco's not going anywhere. Yeah, but people won't have money to buy anything. Yeah, but that's why things like universal high income and these sort of things are what's being floated around. Like, for real, this is not even like new concepts at all. I've been on this live stream like 3 years ago talking about how potentially they're going to, or maybe not that long, 2.5 years ago, talking about how the way that this is probably going to go is that we can't just tax humans. We have to tax robot usage and token usage. At what rate, I don't know. But like, if there are going to be new ways that like humans or humans just suck versus this new, robot capabilities, that, well, we still need to feed the human population. Maybe it's the Amazons and all of these that are going to end up paying for it. That being said, there was a pretty interesting thing that ended up happening the other day that might end up slowing down a little bit of this mania. Meta's own head of AI safety and alignment ends up using OpenClaw and then telling them, hey, you know what? You need to make sure that before you do anything drastic, you ask me for permission. They're like, understood. We're going to start deleting your entire inbox. And then she was like, hey, please stop doing that. And then it's like, okay, we're going to keep deleting it. And she's like, Claude, stop. OpenClaw, please stop. And then it's like, okay, let's delete some more emails. Let's go ahead and keep deleting. Then it's like, okay, so you realize you're not going to immediately replace all of Salesforce and all of these businesses if we can't actively give these things prompts. And then it's just like, all right, we're gonna keep deleting. She literally said, I asked you to not action on anything until I approve. Do you remember that? It seems like you were deleting my emails without my approval, and I couldn't get you to stop until I killed all your processes on the host. Yes, I remember, and I violated it. You're right to be upset. Huh? It's like whenever you ask those AI agents, you're like, hey, this is clearly wrong. And they're like, you're right. Way to go. You're right to be upset. Anyway, that's the head of AI safety. You gotta love how the world ends up just playing out, eh? Crazy. Okay. Let's see here. Base 44. So a lot of people, I see some people talking about how, we constantly talk about AI though, and we're saying how it's getting better, and people are like, yeah, but hallucinations and all of this stuff. Base 44 CEO literally came out and said, we've been making tremendous strides. And in fact, if you haven't used Base in the last 2 months, it's not even the same product. Look at this agent error rate that's happened over the last 6 months. Okay. Before, they used to have error rates that were as high as 11+%. Now in 6 months, they've lowered this down to under 2.5%, and it's falling almost every single week. This is crazy. This is crazy. Anyway, I'm using it. It's also getting me interested about Wix as well. I think I'm probably going to have a stake in that company before earnings. I think earnings are March 4th. Let me go ahead and check that. But I'll let you guys know. I'll let my members know a little bit sooner, but I'll let you guys know. Q4 is in 8 days. So it's going to be a busy week for me of trying to put out new videos, but hopefully I'll have a Wix video out. Probably at the latest this weekend, getting ready for earnings next weekend. Or next week. All right. You're ripping my arm. Sorry about that. It is going to be weird. There, for sure as this comes out, there will be humans that are harmed by robots. And I don't just mean like the psychological and like mental health harm that OpenAI, like they can measure that today. It's definitely real. However, I think it's going to hit a little bit different whenever we have robots in people's houses, and then one of these things are, actually ripping someone's arm off, and they're like, "So sorry, you told me not to, and I violated that." It's going to hit a little bit different than deleting some girl's inbox on her computer. Anyway, it's crazy the world we live in where we just brush that off. I'm like, all right, well, back to the news. Uber to acquire parking app Spot Hero. Could be interesting. I might get... I kind of like that acquisition. I use Spot Hero, especially in big metropolitan cities like Toronto. It's like going around and trying to park in Toronto is like, okay, where for $30 do you want to park? And then you go on Spot Hero and it's like, you can park here for $5. It's like, okay, cool. Thanks. It's pretty good. Maybe we'll need to be parking AVs and everything. Okay. Fed Waller said CEOs are seeing significant job cuts coming from AI, soon to be coming from AI. Who does know these days? Price target upgrade on Google from Wells Fargo. Let's take a look at this. Also, I should put up the prices of the things that we're talking about. If I was a good streamer. I mean, can you blame me? I was gone on Monday. I'll never do it again, guys. I betrayed your trust. I'm back, okay? I love you, and I didn't know what I missed until it was gone. Wells Fargo upgrades Google to overweight from equal weight, raising its price target to $387 up from $350. They're seeing increased compute capacity to 35 gigawatts by 2028 from 15 gigawatts at the end of year 2025, extending its capability leads relative to the hyperscaler peer group. It increasingly appears hyperscaler ambitions are bound by compute constraint. As this market construct persists in the medium term, we see Google gaining competitive advantage as it widens capacity leadership versus peers. What else here? We see multiple new opportunities to capitalize on Google's leadership in compute capacity, distribution, and consumer data. We incorporate this into projections that a Gemini consumer subscription revenue business we project will exit 2027 at a $12 billion ARR from $4 billion exiting 2025. Nice. Little tripling in 2 years. We also see an upside option for Apple Siri relationship, most likely a 2027 plus contributor, and potentially even TPU sales that we believe The latter will remain limited in the next few years as compute capacity is highly strategic. Nice. Tanner, keep doing your good job or your good work. I can't read. Helps me keep up to date on some of my shares. Sick. Wow, Zeta is up 11% going into earnings here. 11%. Maybe that'll be the name that we end up covering for earnings tonight. If I do earnings tonight, I don't know. Should I go do Zeta earnings or should I look to just making that SoFi video and get that out? I don't know. Lots to think about. Is Duolingo even tonight? Ooh, like I know you're laughing saying like, hey, do that one. Haha. But like, I didn't know. I don't see it tonight. No. That's on Thursday. I do want to see Duolingo's earnings. Take a break. You work too much. I did take a break. That was yesterday. I'm back now, baby. Zeta. There's a ton of Zeta spam. All right. Okay. Let's go ahead and check out CNBC really quickly because there was a video I wanted to watch from Trump tariffs. Are we potentially running into another blockade where the Section 122 broad-based tariffs are once again essentially not allowed? Let's have a listen.
Start with the latest tariff developments, though. FedEx, the most recent corporate to sue the Trump administration, seeking a refund after the Supreme Court struck down the IEEPA tariffs. That's as the new global tariff rate goes into effect. CNBC senior economics reporter Steve Leisman joins us now on some of the confusion, Steve, hitting the market about when and how much and what happens next.
And for how long as well, Sarah, along with the battles over the tariff refunds from the emergency tariffs, investors and businesses face this confusion now on these new Section 122 global tariffs. The problem is, like the IEEPA tariffs that were struck down, these have never been used before for tariffs. Under the law, the president can implement tariffs, but under the law, it has to be large and serious United States balance of payment deficit, imminent and significant depreciation of the dollar. And before 1971, or when the U.S. went off the gold standard, it meant the U.S. was shipping gold to foreign central banks. Now, of course, we have flexible exchange rates. Most economists argue none of that is the case today. They say a balance of payments crisis would include investors withdrawing dollars from the U.S. Foreign, of course, are investing in the U.S., surging interest rates, they're falling, and a sharp decline in the dollar exchange rate. It's down, but not sharply, of course. Ed Gresser, who led USTR's economic research unit during the first term, told Politico, quote, Section 122 is supposed to deal with a balance of payments crisis. We don't have such a crisis, so a strict reading would strike it down. While the U.S. does have a large trade deficit, a balance of payment deficit, it's a different thing. And the administration actually argued it was a different thing. In the IEEPA case, it said, quote, a government attorney said, Section 122 does not have any obvious application here where the president identified in declaring an emergency or rise in trade deficits, which are conceptually distinct from balance of payments deficits. Now, courts could give the president more latitude on this issue of whether or not there's a problem, is a trade deficit a balance of payments deficit. But you have this issue, they're 150 days and then they go away perhaps, but also this issue, Sarah, that maybe you get to a place where these are again declared illegal and then you have another round of potential refunds and lawsuits.
Pretty interesting history lesson on the Journal op-ed page today, Steve, where they say that the Trade Act was actually passed after Bretton Woods, but the floating system was so new that Congress was like, we'll throw it in there anyway.
Basically, you don't have this problem because the flexible exchange rates take care of it. Milton Friedman talked about this. I couldn't find an economist, Carl, who said we have a balance of payments issue. But what's fascinating to me is economists might agree on something that's right or in economics, but the courts could have a very different interpretation. They could say, hey, the president says we have a balance of payments problem. Who are we to argue?
Yeah, I asked last hour Senator Elizabeth Warren if she expects legal challenges to these new authorities or provisions that the president has been using, 122, for instance. She says yes, and I guess that's ultimately, you know, what you're saying too, Steve, as far as where this all goes and the uncertainty that's still out there.
Yeah, I mean, look, President Trump is not the first person to do this, but he continually goes where no president has gone before on these laws, and we're testing them to see if that's indeed going to be allowed. I do think the IEEPA tariffs were perhaps more of a slam dunk in that it came right up against Article 1 of the Constitution and Congress's right to tax and levy tariffs. This one doesn't have that. It's more of a nuanced discussion or debate. And the question is how it works its way through the courts. There is one aspect, though, which is interesting. The lower courts did not stay the IEEPA tariffs, and that created this huge refund problem. You wonder if in this case they might stay it to avoid that future refund problem.
I don't know. If it's not as clear cut as the IEEPA tariffs, I don't know if the Supreme Court is going to strike it down, considering that even that was 6-3. We'll see. Amazon pumping. I feel like it's not going to be as pumping as you say it's going to be. It's not. All right. I'll give it to you. Amazon is up 2.3% to $210 per share. Definitely feels good back in the 200s. Whenever you could get this company for under $2, I think Microsoft will be looked at that as well. Like, people are going to be like, wait, you could have gotten Microsoft under 400? That's crazy. Hey, Half Pipe Tanner, is Zeta going to 100 after earnings? I'm not one of the... By the way, Half Pipe Tanner is insane behavior. I'll move on from that. Is Zeta going to 100 after earnings? I don't know. And if I go to listen to earnings tonight, it'll be as a learner, not somebody who has a lot to say about the company, just somebody who's interested in learning more about the company, right? But yeah, we'll see. What does half pipe mean? He's making a joke that I have a dent in my head, but there's 1,500 people watching, so maybe I don't want to go on about why that is. But anyway, I've got a slight dent in my head, and then everyone came out to say that they'd like to skate my dent like a half pipe. And that's it. Yeah, I think it's a Tony Hawk reference. Yeah, people were calling me Tanner Hawk. It was a nasty live stream, and I love you guys for it. Okay. Tanner, can we get a SoFi update about their UI? A friend referred me to SoFi, complained about it. He said he's going to trade on Webull until SoFi improves their UI. Well, if you're trading, you should probably, like, I don't think SoFi's UI has ever been that, but have they changed their user interface to be something bad recently? I don't know. Okay, Coinbase really quick. Let's see how the stock, Coinbase. Let's see how the stock is reacting today. Up 0.4%. Ended up announcing that they are officially launching the ability to buy stocks on Coinbase. Now, they talked about this on the Update the System event that they recently had, where you'll be able to trade stocks 24/5 with zero commission, all on the same platform that you go to, you know, love and purchase crypto. You can buy fractional shares of as little as $1 now available to US traders on Coinbase. Coinbase, you got to love it. Cipher Mining is up 12%, but I didn't actually get a read on that. So let's go ahead and I'm going to just take a quick little gander at what Fiscal AI I'm using Fiscal AI to go see, but on what Cipher Mining had to go do to get up 12%. I'm going to just get a summary of their earnings call right quick. Let's see. While I do that, they stopped mining Bitcoin. It's called Cipher Digital now. Well, I'm just going off the very clearly written Cipher Mining thing here. It's also, I mean, it might be Cipher Digital. I'm not going to argue with you, but I'm just saying what the thing says. It's not a company I follow. Not a company I follow very closely, I should say. Based on current executed contracts, Cipher Digital, you're right, expects to generate approximately $669 million in average annualized net operating income from October 2026 to September of 2036. Huh? They did a 10-year projection? This company does not anticipate the need for additional equity to fund its current contracted developments. Operational targets to include Stingray, which is 100 megawatt, energizing in Q4 2025, another 70 megawatts that's coming in Q3 of 2027, and 200 megawatts that's coming in 2027. The company plans to exit or fully exit in Bitcoin inventory by the end of 2026, with proceeds reinvested into HPC hosting business, while maintaining flexibility from the Odessa site through expiration in July 2027. Interesting. A lot of the cloud names are going to be unbelievably amazing as time goes on. Fiscal Max is enabled. You are correct. Thanks for saying so. So guys, really quick, if you guys know, the Future Investing Pro offer that we have is in partnership with Fiscal AI. But we recently just upgraded that partnership to also allow for the opportunity to upgrade to Fiscal Max. I'm going to tell you guys how freaking amazing this deal is. So because I partnered with Fiscal AI, if you guys know, their highest offer is Fiscal AI Max. It's essentially about $80 a month. I think that comes out to $960, something like this. I essentially got this at half off going forward. So if anyone wants Fiscal AI Max, which comes with everything that they have to offer all in one subscription, it's like whenever you see me use Fiscal AI, this is the one that I offer. You can get literally, I'm not joking, all of the member-only live streams, like the daily live streams, my entire portfolio, all my trade alerts, everything at futureinvesting.pro, included with Max if you get the upgrade. And it's cheaper than Fiscal AI Max just alone. Like it's literally cheaper to get Fiscal AI Max through me with everything else than it is to get Fiscal AI Max through Fiscal AI. That's how freaking great it is. And then the next year, like all the years after that, I can offer you 50% off Fiscal AI Max, which is essentially what, the price I'm getting it for every month. So it'd be like $40 a month. Like crazy. Very expensive, this person says. Well, I think whenever you're dealing with real money in the markets, you want really good tools, right? And the alternative is FactSet or Bloomberg or some of these other ones, which are thousands and thousands and thousands and thousands of dollars. Bloomberg, I think, is like 32 grand a year. Or maybe that's in Canadian dollars. Well, Fiscal AI is, under $1,000 a year. It's like, okay, well, if you're trading any 6-figure portfolio alone, let alone 7 figures or something like this, to have something at your fingertips to deliver you minute-to-minute updates, all the news, everything that you can see, like built-in segments and KPIs, all the earnings calls, 40 quarters of data, 20 years of data. Like, it's actually ridiculously cheap. Everyone compares like different tools. They're like, Flappy Bird's 99 cents on the App Store. So why is Fiscal AI $80 a month? That's expensive compared to, my Netflix subscription. It's like, yeah, but Netflix isn't making you money. Like, you're talking about paying for something that, helps you potentially make hundreds of thousands of dollars possibly. Like, you want good tools, I promise you, if this is the difference between you end up getting quick research and you building out your own spreadsheets, you're going to forget about the price really quickly. This is what I argue with Steve. I'm like, why are you building out spreadsheets, dude? You're worth more than this. Why are you taking the time out of your day trading just, I don't know what Steve has in his portfolio, but I'll venture a bet it's in the 7-8 figures. Okay. And he's building his own spreadsheets. I'm like, bro, it's right here. It's right here for $40 a month. If you use futureinvesting.pro and also get the daily live streams, which we do an hour a day. My sales pitch is done, but that is, I don't know where the Flappy Bird thing came from, but I was playing it, bro. Steven's been pretty successful doing what he's doing. I agree. I think a lot of people have been very successful doing what they're doing before an AI age. It's just like, what I don't understand about Steve is how can he talk up all of these AI tools and be like, oh, everyone's using all these amazing tools and they can pull data so quick and they're great, but I'm also going to manually plug data into a spreadsheet that takes me hours. I'm like, bro, the AI tool is right in front. Like, Fiscal AI uses Gemini to scrape the press releases and pull data. And the way that you know that it's accurate is they have audible charts. So you can go to like Uber, for example. And then I'm like, okay, on the quarterly data, how do I know that this revenue is legit? Well, I can actually pull up and they show me where Gemini pulled this number from. So you can double check everything. And then I can go ahead and look at, 10 different things and like whatever, all the earnings or price to earnings, all the margins, all the forward valuations that got updated every single time that a new analyst ends up changing their estimate. These forward estimates are already adjusted. So then I can go in and look at like price to free cash flow and price to earnings based on real analyst results that are not cheap to get a hold of. I could look at all of this. I could drag this back to 2016 if I wanted. It's not like it would look good. And honestly, my computer's frozen just trying to put this together. But like, all of this is available. It took me 2 seconds to do this unbelievably ridiculous chart. And then the most recent thing that we actually did, which honestly, I think that they did for our community exclusively, but I can actually put together a chart, like imagine Uber and I don't know, whatever chart here. I can actually click shareable link, and then it'll allow me to share this data, even like custom metrics and everything. I can just share this Fiscal AI link to all the other people who have Fiscal AI. But because we have a growing community of people, the pro users on the live streams and everything, we can share all of our charts and everything all on Fiscal AI. And this service just keeps getting better each and every, like what seems like every week. Just now they launched AI prompt templates and shared charts and custom assets in their dashboard. And then the week before that, they launched the query feature. Why did we not talk about this? I can go in and type in like, I don't know what to type, like, I don't know, compute. And then I can search across all the companies that are potentially talking about compute right now. Or, I don't know, CapEx. Or let's say Galileo. And then I can go to Chime here and then see the times that Chime has talked about Galileo technologies. Like, how great is this for me to search through companies like Dave and Chime and all of these companies that I know SoFi is partnered with? Like, that's freaking great. I can type in specific companies that, like, okay, I don't want you to search through all these companies. I only want to see like what the Mag 7 names are. And then I want to hear what they have to say about CapEx or, you know, AI query costs or something like this. And then use this brand new service that they just added for free. You didn't have to do anything. And then people say it's expensive. It's like, guys, that's not expensive. I'm dealing with a lot of money here. Yeah. Okay, let's get back to the news. I'm done my pitch. I appreciate it, though. I just think I want to try to squash, like, I know that there's people saying, like, I just saw a comment in there where it's like, yeah, YouTubers selling courses and stuff like this. Like, dude, I'm plagued by the term courses, but like, you're gonna see there's honestly not gonna be more value delivered like from my course versus anyone else's. Like, mine is going to have by far the most. Like, just on the Fiscal AI Pro thing alone, it's cheaper to go through me than Fiscal AI themselves. I'm getting, like, if you were interested in that, you might as well just go through me as the broker, and then you get everything else for free. You know, all the spreadsheets, all Fiscal AI, the live streams, everything. It's like, I'm plagued by the term course because people just want a blanket statement that, like, oh, you know, all the information is free online, yet, you know, some people have different performances in how they trade. It's not the access to information that's the problem. It's what to look for in terms of, this is the real information, and this shit's not going to lead you into any successful trades at all. Like, it's not access to information. Everyone has free shit online. You can, you know, you can go to Harvard and literally get the entire curriculum for free online, but yet some people still pay hundreds of thousands of dollars. Like, it's completely different. But yeah, so use it, don't use it, I don't care. Like, I'm still going to be here every single day live offering you the same stuff. But if you want more, I have more. But yeah. $80 a month well, I'm not selling a per month. That's I'm not a drip kind of guy either. I completely agree. And I'm not selling anything for $80 a month. But yeah. Since you said Fiscal AI is getting better each week, I can buy it for later to get more value. Sure. Yeah. I don't like I said, you can wait, whatever. Okay. But that being said, let's go ahead. OpenAI ended up putting out this good report here, actually, or an update, I should say, saying that enterprise is already making up for 40% of their business, trending towards 50% of their business by end of the year. They recently just made multi-year deals with Accenture, BCG, McKinsey to productize AI agents inside of enterprise workflows. I think this is going to be crazy, man. I know people are calling for their death. Like, OpenAI is going to go bankrupt, and how can Microsoft take advantage whenever that happens? I don't think they're going bankrupt. Like, you think Nvidia and all of these companies throwing $30+ billion are just doing this at a tip of a hat? Like, they don't have any plans. They don't see what's coming. They, like, I don't know. I wouldn't play that game. Microsoft knows exactly what's in OpenAI, and they're still doubling down. So if there were skeletons in the closet, Microsoft would know. Right? Let's see here. Do we want to hear more about the Stripe new tender offer? Maybe not. Home Depot beat Wall Street expectations even as sales declined. Not too much there. The growing divide between retail and institutional ETF investors. Ooh, Paul Christopher says U.S. equities will be favored in 2026. Let's have a listen to this. This could be quite interesting. What is the case to be made about U.S. equities this year?
Paul Christopher is head of global market strategy at Wells Fargo. Paul, you want to jump into the debate we were just having? Welcome.
Well, I don't cover individual companies, but yeah, it does make sense to us that the hyperscaler concerns about sustainability are just not realistic yet. You're going to still see $650 billion in spending this year alone. Those companies have to compete with each other. That does mean putting the metal in the ground.
Yeah, I wonder if it means market caps will inflect once again. Exxon is about 600 billion today, and Meta's 1.6 trillion. And you wonder if you spin the story forward 5 or 10 years, does that flip-flop? I don't know, but how strongly do you feel about the materials and energy and supply chain companies right now?
Well, we do like industrials right now. We also like utilities. We also like financials. So what we're trying to do here is two things. First of all, play an economic recovery or stronger growth theme, let's call it, that we think is well entrenched for this year and has not been paid enough attention to so far this year. That's the first thing. And the second thing is that, you put your finger on it a moment ago. No one really knows what the adoption rates, the monetization rates are going to be like going forward. So there's no point in taking excessive investment risk in these companies, but you do want to play the trend because AI is here to stay. And so if you're taking industrials, you're taking utilities, you're buying into the whole, let's call it an adjunct theme of data centers, which is still a theme that needs to be developed. And those PEs, those valuations on those companies, they're not that strong. So they're not overpriced, in other words. So we think there's good opportunities there, industrials and utilities. And if you think financials too, that's a good way to play. If you want to hedge against the AI theme, hedge by taking on a stronger economy. For this year, we're seeing regional banks do really well here. We think the tax refunds, the deregulation, and that spending by the hyperscale is going to be important going forward. Financials should benefit.
If I were a financials investor, I'd go, wait a minute, that's what I was doing. What happened? They just had their worst day since April yesterday. Really big declines across the board. Is that just some kind of reset for what's been a strong trade, or a sign of more trouble to come?
No, we don't think it is a sign of more trouble to come. Whether it's a reset or a kind of a repositioning, the regional banks doing really well here. If there's wonders about or questions still about that 10% cap on interest rates proposed by the administration, that's probably lingering in the background there still. But we still like the sector very much. And if I had $1 to put in the market right now, put it in financials.
What do you make of this preference for consumer staples over consumer discretionary? Should we read this as a preference for something that can't be Gen AI'd, to use the Peter Bookvar term, or should we read this as a market rotating into a more cautious and defensive position?
Yeah, I mean, look, we've seen the market the big rotation here is the one from services to goods. And so goods are going to do better here. And that's the real fear about the economy. And so if staples are going to do a little bit better than discretionary, yeah, that might be a kind of a continuation of that theme that we better stay with staples because AI is going to destroy a lot of jobs and put the economy in recession. We don't believe any of that. We're unfavorable on staples, but we would definitely be thinking that this is what markets are thinking. Just look also at sort of the options. If you look at the S&P, the options and the VIX have really skewed towards a big pullback, a big correction that was probably related to fears about the economy. We think all of that is overdone.
All right. Let's go ahead and check out the market pricing right now just to see if things are indeed ripping. Triple Q's up 1.1%. The SPY is up 0.75%. Let's check on silver and gold, shall we? Silver 78.83, although down 2%, still very high since last weekend. Gold also down 1.53%, but still at 473 on the GLD. What is it, like 1/10 of an ounce? So very good there. Okay, like I said in the title, I did recently purchase some more SoFi. I think that people, just like what this person said, that the financials are going to do very well. They're almost like a halo stock, like regardless of what happens with artificial intelligence, you're still going to need capital. And the funniest thing is everyone's like blaming Anthony Noto, like as the CEO, or blaming the dilution as being the cause of this recent sell-off, not looking at everything else that's selling off. I actually think the dilution might be one of the smartest things to have done, considering you're now sitting, well, everything's cheap and everything's selling off. There's one company that's sitting on a boatload of cash. like just like any other investor, right? If you're an investor, you want to sit with a lot of cash during these moments of sell-off. Even an institution that has a lot of cash during a big sell-off has an opportunity to go in and buy some good deals. If, SoFi wanted to go acquire Wealthfront or Lending Club or, any of these businesses, these are up for grabs for them. Like, they're big enough. So it's very exciting. The dilution did kill the momentum. That's not even true. The market has been dying. Look at any of the other fintech names. SoFi's not any different on the recent sell-off. Only Tanner can put a spin on dilution. Honestly, the truth is, like, in the nicest way that I can put it, you guys just don't even know what you're talking about. Like, find me the institutional analyst report that had one bad thing about to say that on the dilution. Did Devin Ryan come out and talk against it? Did Dan Dolev? Did Andrew Jeffrey? Like, who was the institution to come out and say they had a problem with this dilution? They all understood that it was accretive to their bottom line. They beat on EPS while diluting. Like, do you get what I'm saying here? Like, their tangible book value per share went up. Per share. That's hard to do. It didn't go into Anthony Noto's pockets. They're not feeding themselves. They took the hit as well. They did it from a position of strength. It's not a spin. It's just not dilutive. It's accretive. It's just a capital raise. So everyone calls it dilution, but it was actually we should call it an accretion event. That sounds like secretion. I don't like that. I'm not saying the words properly. It was accretive. I'm not calling you guys dumb. It's just there's one comment that I was like, this is not, it's just not true. Yeah. Yeah, they diluted their debt. They can now increase the amount of money that they put towards loans that are doing way better than what those shares were doing before. Like, if you're increasing margins and increasing the rate in which your revenue is accruing, the best way to look at a dilutive event is on a per share basis. Because then you're saying, okay, well, although we went down this much, what did we get from that event? We got the cost and the expenses. This is why SoFi put out a report. Like, just read the report. How come you don't talk about PayPal anymore? I mean, I kind of talked about why I sold off the company, not holding it. I think management didn't know what they were getting into. I think it's a dying company. I think it'll get acquired. Like, we did talk about it today. I said, there's a high likelihood that they get acquired. But, like, yeah, it's not a company that I want to be a part of. You know? Okay, I say it sometimes. Anyone find out who's trying to buy SoFi or buy PayPal? Honestly, my hope is it's a firm. I hope they raise enough money and acquire PayPal. I think that would be so sick. Like if they went in a deal, like almost like a joint venture with a private equity firm or something like this with a firm, help them raise the capital and let Max Levchin take over PayPal again. There's a common misconception that Elon is the founder. He's one of the original founders, but like the founder of PayPal is Max Levchin. He was the CEO of Confinity, which was the name of PayPal before it became PayPal. And then Elon founded this company called X. And then X and PayPal were a part of the same, they were in the same building doing almost the same product. And so they ended up merging. But it was Peter Thiel and Max Levchin that were the original like founding team of Confinity, which became PayPal. So it would be very, very cool if Max could take over PayPal again. Let's see. X is a unique name. Well, he was bringing back that old name, the original thing. Like X was what it was before. PayPal is not dying. I mean, they're essentially guiding for the EPS is declining year over year. That is dying. Like if you're not growing, you're dying. That's why the stock fell like 20% whenever people found that out, because it went from, hey, this company is doing okay to this company actually doesn't have a good future ahead of it. Tanner, I'm up 38% of my CoreWeave calls. Should I sell now? That's up to you, brother. Congratulations, though. CoreWeave's an amazing name. Nice logic. I mean, that is... brother. That's what it is. Like, what are you talking? Okay, if you're this big and then you go this way and you get smaller, you're dying. Doesn't mean I'm not calling for their death, but they're shrinking. Like, if at some point you've hit the highest maturity of a company and then it starts to come back down, what do you want me to call it? Okay, you got shares in it. Okay, you can defend your company. They're dying. Okay. Let's see. And that's not my view. That's PayPal's view. They are not getting smaller. Are you blind? Okay. All right. They sold off 20% for no reason. I got to go to the earnings presentation. Transaction margin dollars, slight decline for Q1 of 2026. Non-GAAP EPS growth, middle digit decline. Here, let's bring this up. Middle digit decline. GAAP EPS growth, middle digit decline. So they're making less than they did the thing before. They're declining in full year. They're slight decline in transaction dollar margin. This is what people are worried about. I'm not calling for their death. I'm saying they're shrinking. I get you have shares in the company, and hopefully you get bought out and you make all that money back. You know? But, and by the way, even small amounts of growth because of things like inflation is still dying. So you can't even have small amounts of growth. You need to be outgrowing the pace of inflation. And then you need to be growing enough that you're outpacing the growth of its peers, which would be market share growth. If you're not taking market share, you're losing market share. PayPal is actively losing market share. It's not my opinion. They said it in the earnings call. They yeah. You're looking on their earnings and looking at the historical numbers. You're going all the way back to 2015 and saying, look how much they've grown in the last 10 years. That's historic. Markets are forward looking. You need to see what are they going to do in 2026? What are they going to do in 2027? And what's going to make them possibly grow in 2028? Yeah. So that's why we don't talk about PayPal. Okay. The VIX is down nearly 7%. That's nice. ADN also down 1%. The swath of payment names are still taking hits. Shift 4 is down, but growing. I am looking forward to their earnings. I sold Axon to buy names that I just had higher conviction in, but I am interested in Axon. I think that they're a cool name. I think I don't really know if you can call them a hardware name or a software name. They're something beautiful that's in the middle. And I think that's a great place to be. I think that all the advents of like drone technology and like robotics and everything like this is only going to widen, their total offering. I think they're a very cool company. I think they're broadening out from just being like for not like first responders and what do you call it? Like just police forces and everything like this, but they're actually going to be breaking out of that and into more just security names in general. So think about the Walmarts of the world, the warehouses, the Amazon warehouses of the world are going to have Axon Enterprise solutions. I think that's cool. I think that they're going to continue to grow. Management's really, really strong. However, they get paid a lot for doing what they're doing. What's better, 4 or Toast? I personally like Shift 4, but there's a case to be made on Toast considering just how much they've recently got sold off. So if you sort of look at them in the last little bit, they've also gotten torn apart. I think at their height, they're down 46% roughly. Where Shift 4 had also gotten sold off. It's gotten a little bit sold off for different reasons. This initial big sell-off was the CEO leaving. Just cut the company down. But he didn't leave because he didn't like the company. He left because he got his dream job, which was the head of NASA. SoFi actively is not going to be buying PayPal. What was it? Anthony Noto came out and he said, as long as I have something to say about it, we will never buy PayPal. Like for real, he didn't even have to say anything about it. And he came out and said he's not buying it. So yeah. I still hold Shift 4. I'm still a believer. Yep. I still like Shift 4 because they're gaining market share. And like, I'm not like not liking PayPal because they're getting sold off. I notice that they're getting sold off because of the things that I don't like. A little floof right here. Shift 4 is getting sold off, I think, for more just like broad-based payment sentiment rather than what's actually happening, which is they continue to growing margins, buying back shares like crazy. Like the company will be fine. Your streams always make me far too excited to own stocks. What does that mean? I think it's you know, the company is or like owning shares over time are great, and there's going to be bad times where people end up fearing holding equities. But yeah, I'm a little bit of a permeable in that way, where I believe that companies will make more over time. And then we always get in these moments where people start freaking out and they feel like they have to change their strategy. You know, they're like, oh, now is the time where the US is no longer the place where people are going to bet on. There's a global shift. I read one Ray Dalio book, and now I'm going to shift my entire trading strategy. I read Michael Burry, so I know that every large company is a fraud, and you know, he knows more about the depreciation of the chips than the people who are actually making them, and the companies who are actually putting them into the computers and actually selling that capacity. I just think, you know, BS. I have a pretty easy strategy for investing, which is like, you know, follow the fundamentals, follow the total addressable markets, see which companies are growing within those markets, make sure that that's being seen from the customers as well, buy good quality products, or buy good quality companies that have good quality products that people want. Yeah. Reddit told me the economy is going to zero, but I feel like that's like half the chat all the time. Like, I was watching a midstream the other day, and I'm like, man, the chat's so nasty when the markets are red. When honestly, we're supposed to be the cool-headed people that know to buy these dips. Like, it's happened countless times. Great financial crisis. America's ruined. All the banks are getting bailed out. The US dollar is going to zero. Oh, wait, that didn't happen. And then it takes years for that to recover. Not just whenever it's bounced off the bottom, but sentiment. Every single year you can find articles going in 2009, 2010, 11, 12, 13, 14, 15, 16, 17 saying the bottom's not over. This is a big dead cat bounce. The financial crisis is still happening. And it's always been a bad strategy to, I think, essentially go bearish. Even whenever you just look at the general consensus of markets over the last, tens of years, bull markets usually last roughly 7 years, and bear markets usually last roughly 3. Okay. Sometimes they're a little longer than that. The most recent bull market lasting 12. Okay. Maybe we get a little shakeout here. You're telling me I don't have the time? A 28-year-old man does not have the time to wait 3 years and accumulate as many shares of a beautiful American companies waiting for it to turn around so then I can enjoy 7 while sipping Mai Tais? No, dude. I get this game. I have to be patient. If you don't get it, all right, fine. I don't have to see you on the mountaintops. I don't even know where I'm going with this, but stay patient, baby. It's going to be a bright future. Everyone just relax. What would Warren Buffett do? Okay. It's 2:23. I started doing this on Steve's streams, but maybe I should do it here as well. I don't know maybe I should do something fun, like some sort of theme every day. I like to have, Mitt's got his word of the day. What I like to do maybe this time is that we do like sort of fun facts or something. Right now, I'm only going to give you, and it's not even a fact, it's more of just a tip of what I do. It's going to be a sleep tip. But maybe every day I do a sleep tip, a market history fact, something like this, where we can do like 5 things and then I'd get going, something to just ponder on. Today I didn't plan anything, but we'll do sleep tips. Okay. The sleep tip of the day, okay, or at least for me, is you want to go to bed in a much cooler room than what you would normally have throughout the day, okay? Your brain essentially drops between 1 to 3 degrees at night and likes to have a much cooler environment than whenever you're awake. Well, you want to try to get it to that place earlier. So one way that I've always found that's really addicting to me is that I like to have a sauna. You know, you try to aim. I'm trying to get a lot better with it, so I'm trying to completely get off technology and everything at around 9:30 at night. Get away from the emitting blue lights from the tons of monitors and everything, because you want to start winding down. I like to have a sauna, roughly about, you know, an hour before I go to bed. Have my shower, and then your body, because it's so unbelievably hot. Same reason for cold showers in the morning. Cold showers, your body really wants to heat up, gets that brain started. At night, you want to try to cool down, and you know, actively want to make things hot, so then your brain's like, okay, cool it off. You don't have to trust me, okay? Trust the data. Let's stay data driven here. All right. I got a 93. And honestly, I didn't actually expect this to be such a great sleep. I had a little bit of sleep stress, and that's honestly just based on me having a late night meal. I ate like late. So without that, I probably would have been over 95 or something like this. Take care of your sleep. You're going to actively thank yourself later on. Little cool at night will go a long way. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But until next time, bye for now.